Welcome to the Tyro Trader YouTube channel. I hope you enjoy it while you learn a few things about finance on this channel. And this is an introductory video to many videos to come about finance actually. The series, however, starts with the basics of Forex, which is foreign exchange trading. So without further ado, let's get into it. Let's get into it together. Remember, this is an introductory video, like I said, and we'll be talking only about the basics of foreign exchange and generally what and how the foreign exchange market works. We get to define what we think Forex is. So what is Forex? Forex is short for foreign exchange, and I like to think of it as trade by barter. It's funny how trade by barter is the center of everything business and finance. This is also true when it comes to Forex, actually. Now, let's break it down and look at exactly what I talk about when I say trade by barter. I liken this to trade by barter because that is exactly what it is. I have some goats and you have chickens. I want some chickens and you have some goats. Finding a fair quantity based on mutually agreed value and engaging in the actual exchange is called trade by barter. So I owe someone some goats and I have chickens. The best thing for me to do is to look for someone who has goats and wants some chicken, and then I can, give some chickens, take some goats, and use the goat to pay my debt. So the trade by barter system is actually a mirror of, the foreign exchange market. It is the exact same thing. Person A wants the British pounds while person B wants, let's say, the Canadian dollar. They both find a common value for what they have and how much they're willing to take for it. And this actually brings us to the basics of what, Forex is. And it says foreign exchange is the swapping of one currency with another. And just so you know, currencies are swapped on a per second basis, and that is why people all over the world are really actually interested in trading Forex for different reasons, actually, for speculative reasons, for trade reasons, for settlement reasons. So there are a lot of reasons why people would want to engage in foreign exchange activities like stock, commodities, even physical markets. The foreign exchange also has a market where currencies are exchanged for one another. So in the market, over $5 trillion is traded per day. And that's why the market is actually really hot. You have a lot of people interested in trading Forex for the different reasons that I've mentioned before now. So what really happens in the market, what actually really happens in the market is currencies are paired with each other in a way that there is a base currency and there is a conversion currency. Let's look at an example. And I like to call this the story of two currencies, the Australian dollar and the Canadian dollar. We can see from the pairing actually that the Australian dollar is the base currency, while the Canadian dollar is the conversion currency. What this means is one Australian dollar converts to whatever the rate is at the moment. Taking an example, 325 Australian dollar converts to 295.28 Canadian dollar. Let's say, for instance, one Australian dollar converts to one Canadian dollar. It definitely means 325 Australian dollar will convert to 325 Canadian dollars. Let's quickly head up to Wanda. You can see the conversion for one Australian dollar to Canadian dollar. At the same time, how much 325 Australian dollars converts to Canadian dollars. This is the same for all currency pairs, and they're paired against one another, and you can do the exact calculations exactly the way we did this. There are two major players in the foreign exchange market. These major players are actually in groups, and the first group is the speculators. In this group, you have the banks and then you have the retail investors. And then in the second group, you have the hedgers. These are companies looking to pay for raw materials, services, or even receive payments for goods abroad now or sometime in the future. Just so you know, we fall in the category of the speculators. Speculators look for imbalances in the market and try to predict an outcome to make a profit. We are retail traders, and we'll talk about this more in later videos. Forex is actually very easy to start. So if you have what it takes to come into the $5 trillion a day market to get your own share of the profit, you're very much welcome. And it starts with a computer, tablet, or a phone with an internet connection. Of course, you can do the Forex trading while you work at a job, or you can actually also practice with fake money till you get a hang of it. So you don't have to, go full blown at first. Once you've decided, you can find yourself a middleman called a broker. Currency exchanging happens through your middleman, actually. Of course, you won't go to US to look for who wants to change 100 US dollars into Naira. It all happens through a broker who connects your account to the source where the buying and actual selling of currencies are done. The broker charges you commissions, which is how they make money, and you make money when the currency or the currencies you hold appreciate. So this is a brief run through of what the foreign exchange market is and how it works. At this point, we'll just let this information that has been shared soak in, and then we'll see in the next video. I hope you've enjoyed this. See you in the next video. Bye.